Morning, ladies and gentlemen. I want to welcome you to this free webinar from Mandatory Continual Professional Development Unit. Let me just say Happy New Year to everyone. We appreciate your support in the past years. And this year too, we are believing that you are going to partner with us so that we all have success in all our endeavor. This is a free webinar of members professional development unit, which centered on the sustainability accounting, role of artificial intelligence, and future of accounting. And we are ready to engage every one of us. We are ready to impact knowledge. Of course, we have our paper presenter on ground, as well as the chairman of the board, chairman of the committee, rather, Mr. Tajuddin Olayinka. At the appropriate time, he will be sharing his thoughts with us on this platform by winner anthem. Just a minute, please.
Chartered Accountants of Nigeria. No rule I can, no rule I can, your accuracy we cherish. We uphold your integrity.
Thank you very much. By now, we want to recognize the chairman of the development committee. Please confirm if he's on ground, please.
Yeah, the chairman is around.
Okay, chairman. Good morning, sir.
Good morning.
Yeah, could you please give your opening remark so that we go ahead?
Okay. I don't know whether the president is here, but let's follow the protocol. Good morning, everyone. The Diamond President of the Institute of Chartered Accountants of Nigeria, members of the Governing Council present, distinguished and esteemed professional colleagues. It is my pleasure to welcome you all to this very insightful webinar on sustainability accounting, the role of artificial intelligence and the future of accounting. As the world evolves and evolving very rapidly, sustainability and technology are the secular forces driving global change today. Now, the intersection of these forces of change are redefining how we approach financial reporting, risk management, and corporate responsibility. In most of the webinars that have been done before, the emphasis may have been placed only on sustainability, sometimes only on artificial intelligence, sometimes just talking about the future of accounting. But this webinar is unique in the sense that it has brought that intersection among these very important phenomena that are defining the world today. And so I urge us to pay very rapt attention because it's going to be very, very insightful. At the Institute of Chartered Accountants and members, the Institute is actually committed not only in leading advocacy for this very important existential phenomenon, but more importantly, the Institute is committed to equipping the members with the knowledge and skills required to stay ahead in this dynamic landscape and also change agents. I hope you can still hear me, please. Hello?
Yes, we can hear you, Chairman.
Okay, thank you. So sustainability accounting is
Go
no
ahead, sir.
longer a choice. Yeah, sustainability accounting is no longer
We
a
can hear you.
choice. It's very imperative. So with the rise of artificial intelligence, our profession must adapt to harness the potential for efficiency, accuracy, and forward-thinking decision-making. So today, we are privileged to have Ngozi, a very distinguished expert from Ernst& Young, Climate Change and Sustainability Services Unit, to guide us through this very critical discourse. Our wealth of experience will no longer provide valuable insight on how artificial intelligence is shaping the future of accounting in the sustainability space. I encourage and urge everyone to actively engage, prepare your questions, take full advantage of this session. Thank you for joining us, and I look forward to a very productive and enlightening discussion. Welcome. Thank you very much.
Yes, thank you, Mr. Chairman. That is the chairman of members professional development committee, Mr. Tajuddin Adewale Oladeyan. Olayinka, sorry, a member of
Yeah, the anchor, you are muted. I don't think we are hearing you if you are hearing us. Mr. Niyi Adeshola, you are muted. Please, I think the technical people should support him. Yeah.
Thank you very much, Chairman. Can you hear me, please?
We are hearing you now.
Okay. Thank you, sir. We have this morning a vessel a climate change and sustainability consultant with over 6 years experience in providing professional advisory services to corporate organizations, government and international and national agencies on climate change and sustainability related issues. Areas of expertise include ESG, energy and low carbon development, scenario modeling, assessment of co-benefits of sustainable economic development plans, data gathering analysis, measurement, reporting and verification for climate change mitigation policies and actions, climate disaster risk assessments for infrastructure projects, corporate climate-related scenario analysis and disclosures, national, regional, corporate, and project level greenhouse gas, that's accounting decarbonization strategy. Our resource person this morning serves as a lead expert reviewer and a member of technical team of experts for Annex 1 parties and non-annex parties submission to the UNFCCC, respectively. As an expert reviewer, our role focuses on conducting technical assessments of party submissions with a view to help the concerned party improve the quality and transparency of their reporting. Ladies and gentlemen, please join me to welcome Ngozi Eze to deliver this paper this morning. Ngozi, you are welcome.
Thank you, Mr. Adeshola. Thank you for the warm welcome and good morning, everyone. Without wasting much time, I would share my screen so that we can comment.
Thank you.
Do I have permission to
Yes,
share?
you are. You have the permission already.
Thank you. When you can see my screen.
Yeah, Ngozi, go ahead. You can see your screen.
All right. Thank you so much. So today, like the chairman already introduced, we will be looking at sustainability accounting, how it specifically relates to the accounting professional, and also the roles that other key function owners within an organization will play in supporting the process of sustainability accounting. We would look at some solutions, standards, and tools that are common practice currently that professionals use to meet the reporting requirements or the needs of sustainability accounting. And then we would look at how AI can support sustainability accounting. So we'll be looking at understanding sustainability accounting. I'm sure that most of us have an idea of what it's all about, while I will not take it for granted that there are people who are still struggling to have a good grasp of the entire concept. we'll look at standards, tools, and solutions that accountants can utilize for sustainability accounting, and also leveraging AI to support sustainability accounting. We'll look at future trends. We'll look at future trends in terms of how sustainability accounting would continue to evolve into the future, the role that accounting professionals are likely going to be playing, apart from what we will look at in detail today in the future, and also how AI tools will continue to support sustainability accounting in the future. And then we'll look at some case studies of organizations who have leveraged AI technologies for their sustainability accounting. So let's just get an understanding of the key concepts. So today we are looking at sustainability accounting. Of course, at the core of it, we have sustainability, and then we have accounting. Then we're going to look at leveraging AI tools for sustainability accounting. So first of all, what is sustainability accounting? Just to explain in a manner that everybody will understand, it simply means how organizations track, measure, and disclose the financial impact and implications of their sustainability-related commitments, performance, related risks and opportunities, and the outcomes of sustainability initiatives that they have undertaken. So previously, I'm sure that most of us have seen a standard sustainability report, or what we call ESG reports of organizations. Yes, they provide a lot of descriptive information with a little information on financial numbers. And then even the financial figures that they are reporting, nobody can really track it or trace it to what the organization had already disclosed in their financial reports. So it leaves a lot to, to the imagination of how some people could maybe come up with figures that are not real, and someone can say for sure that this is what the organization has spent on this initiative, or this is actually how the organization has benefited from their sustainability initiatives. So sustainability accounting is getting mainstream because businesses and institutions are facing increasing pressure from regulators. That is the one that we are all familiar about, seeing that the Financial Reporting Council of Nigeria has already adopted the ISSB, IFRS S1 and S2 for organizations to disclose sustainability-related financial information. So there are other stakeholders that want to utilize this information disclosed to make business decisions. So it informs stakeholders about sustainability goals in financial terms and their alignment with business strategies. So when we look at the 4 pillars of the IFRS S1 and S2, you would see that there are 4 pillars: the strategy, you would see the risk management, you will see the governance, you will see the metrics and targets. So that's to tell you that we are not just talking about, oh, this is the amount we made, this is the amount we spent, and only financial figures. There are other information, how this financial information or sustainability-related financial information affects the business strategy of that entity. It's really a core component of sustainability accounting. So it actually drives integration of sustainability into core business decision-making processes. So for those of us that have been in the sustainability field, we know that if you go to the board sometimes to tell them you want to implement certain sustainability measures, they would ask you, like, they are looking at the bottom line. How would it benefit us? How would it benefit our business? So now that we have quantified the financial impact, or we want to quantify the financial impact of these sustainability-related issues, whether it is initiatives or risks and opportunities that the company faces. So we have figures to present to the decision makers within an organization. So it is used for internal and external decision making, and for the creation of new policies that will have effect on the organization's performance. So we are looking at the impact at the economic level, the ecological level, and the social level. That is what we are looking at. When we are quantifying these sustainability factors, we are looking at sustainability issues that have to do with economic factors. So this is what we call like the triple bottom line. So sustainability, most people are looking at it from the angle of the economic impact of these issues, the ecological impact of these issues, and then the social impact of these issues, and then quantifying them in financial terms. Then we're looking at artificial intelligence, the role it has to play in sustainability accounting. So AI is just, it refers to systems and tools. We are all aware of how technology has been evolving lately. So they simulate human intelligence to analyze data, automate tasks, and generate insights. So in sustainability accounting, AI primarily supports in data collection. We will see such cases when we're looking at the case studies. Then the analysis of the data that we've collected and preparation of reports that will meet reporting or regulatory requirements. So it also enhances predictive capabilities of anticipating ESG risks and optimizing resource allocation. So when we look at the comparison between traditional financial accounting and sustainability accounting, we would see that sustainability accounting looks at both historical and it's also forward-looking. So these AI tools help us when we are making these projections of the financial impacts or expected financial impact of sustainability-related issues. So let's look at traditional versus sustainability accounting. Yes, there are certain things that they have in common. Okay, for example, if you look at the purpose of traditional and sustainability accounting, and then the focus, first of all, the traditional accounting that we're all familiar with provides a clear picture to investors, management, and regulators on the financial health of the organization. So it's just looking at the bottom line, it's looking at financial health of the organization. So it's looking at the revenue, expenses, profits, and losses. So we all understand a good understanding of the information that we present when we are conducting traditional financial accounting. Meanwhile, on the other hand, sustainability accounting now seeks to integrate sustainability-related issues into the traditional financial accounting that we are doing. So it provides a comprehensive view of how material sustainability-related risks and opportunities could affect that organization's strategy, their business model, and their financial standing. So it's looking at how it has affected that financial report, the financial statements that we already prepared. How has whatever we have there, the metrics and all the numbers that we have there, how has sustainability-related issues affected either the growth or decline of those numbers? So the reporting standards are also different. We know the accounting standards that are common. And then for the sustainability accounting, we have the Sustainability Accounting Standards Board's IFRS S1 and S2, which you can find will integrate or smoothly with the IFRS accounting standards. We also have the TCFD, that is the Task Force on Climate-Related Financial Disclosures, which is also being like replaced gradually by the IFRS S2 specifically. So we have the Corporate Sustainability Reporting Directive of the European Union that mandates organizations or provides guidance for organizations to provide sustainability-related financial information. So the time frame, like I said, when you're doing financial accounting, you're looking at historical data, both short-term and short-term mostly. So you have your reporting year, and then you have your financial statement, your annual report will just contain information on what has happened within that your reporting year. Meanwhile, when you are looking at the reporting year or time frame for the sustainability related or sustainability accounting, you are looking at what has already happened, and you are looking at what is likely to happen. That is projected financial implications of these issues. So it is also forward-looking, and it looks like long-term projections. So many times we look at projecting it up to 2050. So we have short-term, which could be 5 years or 2 years, right? Or 10 years for medium term, and then we have over 20 years for long term, depending on the time horizons that the organization chooses to use. So, however, whatever information that you have reported for the short term under the sustainability component of the disclosure must align with what we have from the financial statement. So, data and metrics, quantitative financial metrics is what we always have for traditional accounting. Meanwhile, for sustainability accounting, we are having both quantitative and qualitative. So previously, it was mostly qualitative information, but now there is a focus on the financial data. So key stakeholders, primarily we have investors, creditors, and regulatory bodies for traditional accounting. In addition to that, sustainability accounting also targets other stakeholders. So you could have your customers, your clients, that they really want to know what you have disclosed in your sustainability-related financial disclosure. So what is driving this growing importance of sustainability accounting? Because it's possible that many of us have not heard of it until maybe last year or 2 years ago, right? So what is driving this increasing interest in sustainability accounting? It didn't start today. Seeing that TCFD has been in existence, SASB standard has been in existence. So first of all, businesses are continuing to face increasing pressure from stakeholders, like I mentioned, on the impact, especially the financial impact of their ESG performance. And then they are demanding greater transparency. If you are telling us that this is the financial implication of your initiatives, we need you to link it to the financial statement. We do not just want you to just quote numbers, quote figures, because of what we call greenwashing. Organizations can make claims, bogus claims, but by the time you have to provide verifiable information, okay, because we know that our financial reports, they undergo audits, strict auditory processes. So once we have done that and we get this information or link the information we have in the sustainability component to line items in the financial statement, then we kind of increase the confidence of stakeholders in the information or the data that we are providing or disclosing. And then regulators are driving mandatory ESG reporting across industries, both in Nigeria, seeing, I've mentioned before, Financial Reporting Council of Nigeria, NGX, and not just because of these organizations. At the federal level, because of this adoption at the federal level, we are expecting that there will be federal level policies that will also make these reporting requirements to be mandatory for organizations. It's already happening. The National Council of Climate Change, in the Climate Change Act, already stipulated how organizations should report this information. So effective sustainability accounting would link ESG performance to financial outcomes. There will be no isolation. You will be seeing the referencing, cross-referencing. This is where to find this information in financial statements and vice versa. So it supports decision-making. Investors want to see this information to make their investment decisions. Many companies, most companies that have investors from Europe will let you know that they need to comply to the reporting requirements of the CSRD using the ESRS. So even the United States SEC also issues these requirements to disclose this related information. So it provides valuable information for stakeholders to make business-related decisions. So understanding sustainability accounting, let's see how it goes. Like, what do you do when you want to conduct sustainability accounting? As an accountant, what are you required to do? How do you go about it? What are the expected outcomes? Are there standards that you need to meet their requirements when you are providing this information? What is your role? Are you supposed to do this alone? Where do you get this information that you need? What are the tools that are available to you? So these are the things that we'll be considering in this section. So first of all, what is sustainability? To explain it better, I know that many of us we are familiar with SDG goals. That is the United Nations Sustainable Development Goals, 17 of them. So what is sustainability? It simply means meeting the needs of the present. without compromising the ability of future generations to meet their own needs. So the organization is not only looking at financial gains, but ensuring that it does make profit sustainably, so that even the organization itself is not impacted negatively in the future by the present activities that it partakes in. So let's look at the handshake between sustainability reporting and financial accounting and reporting. So at the intersection of these two concepts, we have sustainability accounting and sustainability related financial disclosures. So sustainability accounting, the traditional one, I have been repeating what it's all about, that it involves disclosure of the ESG performance of an organization to stakeholders that are interested in such information, that traditionally just have sustainability professionals like myself preparing this report. We do not come to the accountants or financial professionals to say we need this information. And
Hello,
then
Ngozi.
there are certain, yes, can you hear
Hello,
me?
Ngozi. Please, something is covering your slide to the right. Could you please address that?
Is it what?
Sorry about that. Something is covering your slide to the extreme right, down.
This side, right?
Yes, something is covering it all.
Oh, sorry.
Yes.
But is it still there?
It's still there. Okay. Yes, go ahead now. Go ahead now. It's no more there.
Is it better now? I'm
Well,
so sorry.
it's there. Probably you can turn off your video so that we'll see how it would look like.
Okay.
You can turn off your video.
All right, let me do that. Is it better now?
It's still the same, but go ahead. It's still the same. It's still the same. Something is blocking your slide.
Okay. Maybe I could stop sharing and try to address it.
All right, please do.
All right, please. A minute, please.
Participant, you are very sorry, please. She will soon come up.
Okay. Let me share my screen once again.
All right, go ahead. Yes, it's better now.
It's better. Okay.
It's better now.
All right. Thank you.
Okay.
Okay. Sorry for the interruption.
All right.
Okay, so we were looking at the handshake between sustainability reporting and financial accounting and reporting. And we said that for sustainability accounting and sustainability related financial disclosures, in addition to the traditional roles or activities that you would undertake as an accountant, you would need to incorporate sustainability related costs and liabilities into the company's financial accounts. You need to provide critical data that can influence financial decision making for investors. example for assessing the long-term viability of projects and investments. So by the time you incorporate these sustainability issues into both the accounting and maybe the financial projections of the organization, it provides this information. And we are looking at the people that it provides information for: regulators, consumers, investors, shareholders are interested in this information. And then it requires the efforts of several key function owners within an organization: the accounting professional, the financial professional, people that conduct financial modeling in the organization, sustainability professionals, even people that are in charge of risk management, compliance team. Everyone has a role to play, especially in providing the data and then in disclosure of information. So various reporting requirements. The US Securities and Exchange Commission requires this information. The ISSB S1 and S2 requires this information. Then European Union's CSRD also requires this critical information. So accountants play a key role in measuring, managing, and communicating the financial impacts and implications of an organization's sustainability performance, risks, opportunities, etc., to business outcomes. Without the accounting professional, all the required information, it's only stories that you will be seeing. So if you look at some organizations who have already published their sustainability-related financial disclosures using the IFRS S1 and S2, you might notice where they are identifying gaps. And most of the gaps have to do with sustainability-related financial information, right? So they are not able to provide this information because it was not considered when the financial statement was being prepared or when the accounting that provided information for the financial statement was happening. So accountants have a key role to play in making sure that this information is available. So that is actually the core of the problem. What we're trying to solve is that, yes, for Nigeria, we have adopted these standards, and even the ones that we have not adopted, many organizations have to comply by them. And we are expected to disclose information, both quantitative and qualitative, on the impacts, financial impacts, other business decision-making impacts of these issues, this sustainability and climate-related risks and opportunities, their impact on the organization's strategy, decision-making, financial position, financial performance, and cash flows, both current and anticipated. You cannot skip any of these reporting requirements. You can't just keep the impact on financial performance and just report on strategy and decision-making. So these are the critical information that we need. Now, disclose financial information. You must reference the components in the financial statement and line items where that financial information is captured. So if you have not quantified it, you cannot make that reference. So most organizations have not been able to provide this required information to meet reporting requirements. So that is where the problem comes, and that is where the work of the accounting professional comes in. So the core integrations that must be adopted by the accountants involved in sustainability accounting is identifying what are these issues, these sustainability issues we are talking about. What are those ones that are important or material to the company's business operations based on any framework that they're already using, okay? And this information, nobody is expecting you to maybe conduct the materiality assessment or other assessment that you need to identify because you are not a core sustainability professional. So it may be a challenge for you to start undergoing. You may be wondering, do I need to go and undergo training to become a sustainability professional in addition to what I'm already doing? So this information should already be made available by the people who are responsible for it. So your own is to identify what are those aspects that I need to cost for. What are those? It could be energy use, it could be water consumption, it could be waste generation, or maybe levies or other regulatory levies or financial commitments that the organization must have. And then you collect the data on quantified sustainability impact. So you might have how many people we have trained in a year. For example, an organization that says that staff training is material to the organization. So someone may already provide you with how many people that they trained in that year, right? So your own part will now be to collect the number of people that you trained, how many times was this training conducted, what is the cost implication, and then use any of your methods to quantify how much it has costed the organization, right? If there have been any savings related to those trainings or any of the initiatives, for you to collect the data on those initiatives, physical quantity or quantitative data, and then translate it to monetary values. Then finally, where is it supposed to be in the financial statement? You need to identify where to incorporate them in. So then you prepare to respond. If anyone comes to you to say, we want to prepare this report, or you are involved in the preparation, you are able to provide necessary information required. So these are the core components of what you will be doing as an accountant when it comes to sustainability accounting. So common practices currently, because you cannot say that there is a specific framework that people can adopt to, step by step, do this, do that. However, people can develop several frameworks that would allow them that satisfies your professional accounting standards and also helps to meet the reporting requirements. So like I mentioned before, identifying material sustainability aspect that it wants to cost, right? So it starts from the materiality assessments by maybe the sustainability professional, okay, who would also conduct what we call scenario analysis and stress testing to identify maybe climate-related impacts on the organization. Some of them may already have happened. Some of them may not. Let me use an example that you can relate with. Let's say, for example, an organization operates daily, produces a certain product, right? And then takes it to the users or the customers every day. But because of a climate-related event, such as flooding, right? Or earthquake, okay, I'm not sure I've heard of earthquake in Nigeria. So such as flooding, in other countries, maybe landslide, or maybe rainfall, maybe excessive rainfall that nobody anticipated for several days, or such things, or maybe it was shut down, the processing plant was shut down. Maybe they are violating one environmental related rule or regulation. So they were shut down for a number of days. So the information you will get is that, okay, there was downtime for this number of days, and because of it, maybe there are some products that they produced, they were not able to take out and they got spoiled, right? They have lost some money when that event happened, due to that event. So ordinarily, your own is to say, oh, this inventory that we had before, okay, we lost money, and you just capture it the way you would traditionally capture it. But you have not linked it to a sustainability issue. But by the time you follow this process, you're able to link these losses or profits to sustainability issue or sustainability risk and opportunity. That's what we call it. So by linking it to it, you will know where you have already assigned it, but you have not captured it in your books when you are doing your accounting. So now you're able to break it down appropriately. So anyone that sees what you have done, your work, we know that, yes, you consider sustainability issues. It could not just be losses. There could be profits. Maybe an organization identifies maybe an opportunity that has to do with climate transition opportunities or environmental opportunities. Okay, look, the weather has gotten very hot, and so this product will sell very well for the people in this area. Let's take advantage of it. It has been getting hotter and hotter and hotter, and this product will be well accepted. So that issue of the temperature getting hotter and hotter is linked to climate, right? Climate change. But before now, we are not able to say that this opportunity that the organization is exploring has to do with a sustainability issue. So by following this sustainability accounting process, you're able to link it and say that this income, right, or revenue that was made by exploring that opportunity is sustainability related. So I don't know if that is clear. So that is how you identify from the work of the sustainability expert who has already identified all these issues, identified the opportunities, and then said the company is already doing this and this and this, right? So your own part will now be to collect this information. How much has the company made? how much product have they produced, how much has gone into the production, marketing, every other thing that you need to do your accounting. So now you are considering sustainability related issues. So you collect data, that is the second part, collecting data, then quantifying, using any of your cost accounting methods, quantify the cost implications, and then you will know where to assign them in the financial statement, where they fall under. And then you prepare to now provide this information for disclosure under the sustainability related financial disclosure. So this is just like flowing from what I've already said. By the time you cost for all these things, make the costing or assign the financial quantities to these figures or these issues, you're able to classify them, whether it's an expense, whether it's a cost, whether direct or indirect cost or any other cost. Income, is it an income? Is it an investment? As long as it is linked to a sustainability issue or what we call sustainability related risks and opportunities, then you classify them. Is it a sustainable loan? Or is it maybe something that has to do with environmental taxes, carbon taxes, and others? So you classify them based on your knowledge, and then where are they supposed to be? Where do they fall under? So what our understanding is that most times we already have these figures because there's no expense that the organization incurs or cost or income that you have not already captured, but they are all lumped up and not linked to sustainability. So that is the difference now. You have already linked it to sustainability when you are doing the accounting, right? So when it comes to disclosure time, you easily provide this information. So, so this is just showing some examples of this sustainability related financial information that have been assigned somewhere under the financial statements, right? So cost associated with energy and water use in production process, it is sustainability related because we're talking about energy use, we're talking about sustainable energy use, the type of energy, how much you are spending on it, right? If you have implemented any energy efficiency measures, how much has it saved you? Okay, so you know where to assign them. So this is just showing us examples. Under statement of financial position, remember that IFRS asks us to disclose specific information. Cash flows, how has this thing affected your cash flow? So if, for example, you have costed for outflows for capital expenditures on maybe water efficiency equipment or infrastructure, energy efficiency equipment for the organization for that year, you have done that and you're able to identify that this is how much we spent, right? So it is captured under your statement of cash flows when you are reporting, when they say, what is the impact of your sustainability related risks and opportunities on the organization's cash flows? You start to say all those things. Within the reporting year, this organization spent this amount of money on this and this and this. And because of this, it has saved us this amount of money. The amount of money it saved you, where is it captured in your financial statement, right? So we are able to say this is where it is captured. You are able to reference it in the reporting. So if you have also done something on where we say financial position, what's the impact on financial position? Maybe you have done some investment PPE that has to do maybe renewable energy, right? Because that's the one that normally comes to mind when you're talking of sustainability. There are other social issues too that you would get to know about the organization you want to conduct it for, from the materiality assessment and the risk assessment and prioritization. So you just get, it's like getting a list of the risk and opportunities and then identifying, has there been any financial implication for us? If there is, quantify them, and then where is it captured or where should we capture it? So, and if there is any opportunity that the organization is expecting to explore, that is where the financial modeling comes in to say projected inflow or projected income from this investment or sustainability related investment that we just made. So all those other things will also be in the disclosure, not just what you have already maybe spent or what the income that already came from that investment. So the sustainability aspect will also have to do with projected, whether it is projected losses, whether it is projected profits, okay, or what you are even planning to invest in the future. So all those things should be disclosed. So what are the standards, tools, and solutions for sustainability accounting? First of all, let's look at common challenges that you may face on sustainability accounting as an accountant. First of all, how do you value intangible assets? For example, brand reputation. If there is I don't want to mention an organization, but in the oil and gas sector, when you hear of oil spill, maybe there's an organization that comes to mind, and maybe there has been bad press surrounding that. Maybe there has to do something with environmental pollution. Maybe an organization that dumps waste in an open water body that services a community, and there's bad press surrounding it. It makes them lose credibility. Sometimes there could be maybe environmental fines, maybe there was closure. So how do you quantify the financial implication of maybe the impact of all those things on your brand reputation, employee satisfaction, okay? So you may struggle to be able to assign appropriate values to this. So, but there are ways to, solve all these problems. You may not be able to say, oh, our employees are not satisfied. This is how much dissatisfaction. You cannot quantify it in monetary terms, but it could lead to a high turnover, the risk of high staff turnover. So you can quantify it in terms of how much it is taking you to recruit staff to replace those ones that are leaving, that are dissatisfied. How much are you spending on training new staff, and maybe there's even someone that took the complaint to court, So litigation costs could also be quantified as part of this. So we need to think outside the box of how all those things are captured in your financial statement, but you need to think outside the box to say, okay, this particular expense is due to this sustainability issue, okay? So data availability and collection is an issue. You may be asking for this data for you to make your quantification, and it's nowhere, nobody can provide it for you. Then how do you integrate all these things? How do they come together? Okay, some people are talking about the volume of the report. How do you make sure that you capture all the required information and it's not too bulky, right? Then resistance. So first of all, there are two, if you're looking at resistance, first of all, you're looking at the organization. Do they want to spend more resources on this, right? Then when it comes to, adopting AI, there could also be the resistance from the accounting professionals to say, why are we talking about AI? Won't it take my job? Okay. So it's important for all the professionals, accountants, collaborate with the sustainability professionals within the organization. Because as we are talking through all those things, there may be things that you are wondering, how do I get this thing? How do I understand these topics? So it's like a handshake. It's a collaboration. We cannot overstress how much of a collaboration is. The sustainability professional will not be able to meet their reporting requirements if the accountant is not there to do their work, understand what they should do, vice versa. So there are other key function owners that you must identify that would also support you in the journey of sustainability accounting. Whether it is for you to understand the concept, you can just identify someone in your organization and make friends with them. So lack of expertise and availability of guidance, it's really scarce because it's like we're just starting to trend, gain traction. So you might be struggling with how to navigate the whole thing. So these are the issues or challenges that you may face as an accounting professional. So we'll look at some tools and guidances, guidelines, software that can support you in your. So this one is just the guidelines. I'm sure that many of us are familiar with them when we are talking about identifying the issues to even account for. So the GRI and the SASB, that is Sustainability Accounting Standard Board, this is more appropriate for sustainability accounting because it has to do with financial information too. So, but these two, GRI, that's the Global Reporting Initiative, and the SASB helps us to identify those issues that we need to account for. Then the CSRD, if you're thinking, what are the information that we even because having an understanding of the information that you disclose in your reporting will help you to know, okay, this is what I need to account for. So the CSRDs, ESRS, that is the standard, and the ISSBs, IFRS S1 and S2 provides guidance for you to know what you are disclosing so as to know what you should account for. So there are some software tools and tools that are out there that we can use. So let me just mention that there is a way that if you understand what you are supposed to do, you can also upgrade your existing accounting software or tools to be able to, help you with the tasks. There are also some software out there that are like trying to incorporate sustainability issues into traditional financial accounting software. So at EY, we have some tools that we use for sustainability related issues, whether it is the assessing the material topics or quantifying the impact or footprint of the organization, that also supports the assigning of financial implications of these issues. So we have the EY ESG Compass, which helps to provide insights to navigate complex business challenges. So it has a lot of things. It helps in scenario planning. I mentioned that this sustainability reporting or financial reporting has to do with both historical and forward-looking information. So it helps you with your forecasting, it helps you with the scenario analysis, and gives you different outcomes that you want, okay, when it comes to ESG solutions. So we have the ESG suite that is suited for the materiality assessment. It helps organizations to know how ready are we. Many organizations want to adopt these ISSB standards, and you need to show that you are ready before you can get a go-ahead from Financial Reporting Council of Nigeria to say, okay, go ahead and adopt. So this ESG suite helps us to assess what you need to put in place, your systems, what changes do you need. Then we have the EY CAP that helps with climate change related risks and opportunities. Specifically, I've mentioned physical risk like flooding, excessive or temperature, or what we call heat stress, erosion, whether it's coastal, sea level rise, and all that. There are other transition risks like carbon taxing. Nigeria is thinking of implementing that. So carbon taxing is a climate-related transition risk. So this tool helps us to check how it's going to affect the organization in the short term, long term, and medium and long term. So there's another software called Enablon. So it is used for sustainability, EHS, and operational risk management. So you may get the data by the time the person that is responsible for doing all these other assessments, they finish it, they will provide you with the data that you need to do your accounting. So there is other software tools, but I'll just go through them. EcoChain and Ecometrica, those ones are for carbon accounting and management tools. So you know that carbon accounting is an integral part of when they're saying sustainability accounting, you know that climate change is like #1 issue. So there are other data management platforms, Workiva, Data-ngr, One Report, that helps you to generate reports. So the issue is not looking for new software solutions. The idea is look at the one you already have in place. What do you need do you need an upgrade, or do you need, to acquire any additional software? You need to know if what you have is sufficient before you think of getting anything additional. So understanding what you need to do, then assessing whether your solutions or your software or your tools can help you to meet it, or you can upgrade, or you can acquire any new software or tool. So these tools that I mentioned, there are some challenges. When I was mentioning even some of the EY tools, you will see this one is doing ESG materiality, this one is doing GAG accounting, this one is for data management. So there could be a problem of how many software and tools do I need, and how do I integrate all the outcomes or the output from them to get what I need. I just need data to do my quantification and do my reporting. So how do I manage this issue? And then limited scope. There are certain things that they may not be able to do for you. Many of them will not. In fact, I didn't mention any of them that will do the quantification or assigning financial levels or financial costs to all these issues. So I didn't mention any of them. Most of them are just looking at assessing the sustainability issue based on maybe levels, okay, or impact. So the challenge is measurement challenges. The metrics, It could be subjective, it could be challenging. Like I mentioned, those ones that are non-tangible, right? It could be subjective. Okay, what are the basis for saying this is the cost or this is the expense from this issue? So, and then cost implication. There is always a cost implication when you want to acquire new software or tool. Then training and expertise, very important. How do I even manage to utilize this software, even if I get it? So these are some of the challenges. So let's look at how AI can help us. When I was talking about data, some of the data you may not be able to get. You know, there may be stories. We don't have this data now. We don't have that data. Okay. So how can AI help us to collect this information and be able to quantify these financial impacts? So AI in sustainability refers to the application of these AI technologies to enhance the measurement, the analysis, the reporting, and the management of ESG performance of the organization. So accounting professionals can use AI data tools to analyze vast amounts of data with precision and speed. The chairman has mentioned that we've done a lot on artificial intelligence as it relates to your profession. So we'll not waste too much time. So, but providing real-time financial and sustainability insights and also predictive analytics, it would help the sustainability accountant to offer more proactive and strategic advice to clients. So let's look at AI solutions, how it applies to ESG factors. So when we're talking about AI, we've mentioned how AI, how it tries to emulate the human brain. So it can learn from large amounts of data. Okay, for example, deep learning models. So it allows the machines to learn from available data and to make decisions and predictions. For example, machine learning technologies. So when you are deploying AI systems for your sustainability accounting, it's not only to, get the data and do the analysis. It means that from the implementation, these AI tools can be used to, monitor and, record data real time, and then help to analyze and just give you, on the interface, give you the actual data that you use, depending on how it is programmed. How much data do you now need to do your accounting? Okay, so by adopting AI models, you have the ability to treat large amounts of unstructured and structured data, because this information can come in different forms. They are not always numerical figures, okay? We're talking about people's dissatisfaction. Maybe people are not happy with the product of the company because of their sustainability non-performance. So, and they are, giving feedback on maybe an online platform. Maybe they are not subscribing, maybe they are not purchasing, and they're giving feedback, we are not happy. And because of that, they are not purchasing, they are not buying the products or services. So AI tools will help you to monitor all this data and to actually know how much lost sales that organization has, right? So this information can be pulled by the AI models, and then you can use it for your work as an accountant. So what are the benefits of leveraging AI in sustainability accounting? We are talking about data. That is even the core, because this sustainability accounting and sustainability related financial disclosures relies heavily on data. Without data, we will just be telling stories. And once anyone picks it up, they will say, these people are telling stories. Do they think that this is the normal ESG? But please, we need to see the data. We need to see verifiable data. So it helps us in efficient data collection. So it can automate the collection of vast amounts of data from various sources. Wherever that source of data you need is, you can already deploy IT AI technologies to collect this data, right? And then provide it for you, depending on what that organization, like the services or products that they're providing or what they are into, right? So you're able to collect this data. And data analysis, like I've mentioned before, you do not need to make certain calculations. Let me use an example. If I collect data on energy savings every day, how much energy are we using? And I'm able to say, okay, I want to calculate, compare it to last year's energy use level to know, the outcome. Maybe we implemented some energy efficiency measures in the organization. I need to be collecting maybe daily energy use, monthly, sum it up monthly, sum it up by year, compared to last year and say, this is how much we saved. And then start checking for each year, each month, how much did we spend? Like, what's the rate? Like when we're saying how much do you pay electricity rate, or maybe you are buying petroleum products, how much is it per month? Then you now start checking how much you spent, how much you saved. So these AI tools can help you to just do this, all these things, analyze the data, even provide it on a dashboard, show you everything, show you, just present the information to your board members or the stakeholders and say, this is it. You can see from this time to this time, this is the investment that we made. This is how much we have been able to save or how much you have been able to make. So you can then have readily available data for your account. So enhance transparency and accountability. We can also deploy AI with blockchain technology to enhance transparency and traceability of sustainability data. You will not use data that if they ask you, where did you collect this data? You will not be able to trace the data. So it helps you to be able to trace the source of your data so that, and during assurance, it's easy for you to go through the assurance of your reported information. So resource optimization, like I said, they utilize less energy, okay, than traditional data monitoring devices. Finally, reporting and compliance. So it can help you to generate sustainability reports. I have mentioned some other software that helps with that. There are also AI tools that they are like a suite of solutions that they help you to get the data, to do the analytics, prepare your reports and everything, all in one. So that's how an organization can leverage AI in sustainability accounting. But there are some challenges with AI, using it for sustainability accounting. When we talk about this technology, we always say it's garbage in, garbage out. So first of all, you need data, real data from the organization to train these models. So if you not use high quality data, the output, whatever you'll be doing from that then on, will not be good enough, right? So, and then the second thing is that machine learning models usually require large amounts of data, right? So there's a challenge of being able to get the required amount of data to train the models for that organization so as to be using it. Then resource is expensive. You have to spend money. Does the organization want to spend that money? You need to show them or prove to them that it is worth it, okay? In financial terms. Yes, so secondly, skilled personnel to do it. If you don't know how to, getting these tools means that somebody has to be trained to be able to use them. You need to learn how to, if there is any software out there or any AI tool that the organization wants to adopt, you need to spend the time to familiarize yourself with how to do it and not say, I cannot do this thing again, I'm too old for it. You need to, be up and doing and then upgrade when it comes to the skills to operate them. So that is the key challenges, not so much challenges, right? The benefits are higher than the challenges, but there's always a challenge that we need to consider. And then there is the responsible use of AI. I'm sure that you all know that you need to consider. So when you are using AI tool, you need to consider what are the guidelines to make sure that you're using them in a responsible manner. So let's look at future trends. These future trends, we are looking at how the use of AI for sustainability accounting will evolve in the future. What will it look like? We'll be looking at sustainability accounting. In your opinion, and looking at the evolving landscape, regulatory landscape, do you think that sustainability accounting will go away? I was speaking to someone recently, they wanted to do something with ISSB disclosure. And then we are thinking, what about Trump, President Trump coming up to say, we are no longer going to be signatory to the Paris Agreement? How is it going to affect this whole issue? So there could be a lot of arguments surrounding that. You may have your own opinion of how it is going to impact the whole entire concept of sustainability reporting. But the core consideration is that he has a 4-year term, and then there's another president, and then the president will come up with some policies, and it could be something that has to do with sustainability accounting, like if you are not already working ahead of time and gaining the skills that you need, it will be difficult for you to meet up with how it will evolve. Secondly, it's not only USA, we have Europe, the entire Europe, we are still on track. Nigeria, we have our own regulations that we also have to comply with. It's not going away because of the whatever the United States of America, whatever they are doing, it's not going away. So it will continue to be there. The investors, the socially responsible investors, they are always there. So if your organization wants to access funding or investment from these types of financial sources, you need to, it will continue to be there. ESG investing will continue to be there, right? Not only ESG investing, there are several financing sources that have to do with, they are looking at sustainability. They could be looking at gender equity, what we call GESI, gender equity, inclusion and diversity, poverty, what is it called? Poverty alleviation, right? Yes, the impact on the poor and vulnerable community. They could be looking at all those metrics. So before they make an investment, so they need to see these figures. It will continue to be there. Then finally, when it comes to sustainability, for example, climate-related risks and opportunities, there's no policy that anybody can bring that will stop, should I call it the temperature change? Climate change is real. So the flooding and other physical risks that we are exposed to, that an asset could be exposed to. There could also be some transition risks that, for example, I've mentioned carbon taxing. There are opportunities, okay? For example, the carbon market. Organizations can develop projects that they can monetize the outcomes in the carbon market. These renewable energy initiatives, solar, hydro, all those things that have to do with just transitions. The opportunities are so much, they keep coming up. So the organization will continue to look for ways, to grow, to make more profits. Therefore, they must look at these areas as where they can make profit or where they can explore to grow their business. They need to look at their business strategy to ensure that they are maximizing the opportunities that exist in that field so that they are not left behind. So this will continue to be relevant. We're not seeing like we need to stop being, the problem that some people from Nigeria may come to me and say, why are we talking about climate change? Is it important to us? It's not important to us. And let's look at how to alleviate poverty. Let's look at how to do this. Let's even grow our economy. And I will let them know that if you are not thinking of climate change, if you are, for example, in the agricultural sector, and you're not thinking of climate change, and you're not thinking of how droughts will affect what you are doing, and there are solutions to combat it, you will lose money, okay? You will lose money and keep on losing money. So we can't close our eyes to it. Then secondly, while we are shutting our eyes to it and saying it's not our business, people from developed countries are cashing in all the solar panels that we're using in Nigeria. I don't think anyone is like manufactured locally. We all import everything. So we need to start looking at how to tap into the opportunities. So what will be the evolving role of the accountant? Yes, we have established that you will be taking the lead when it comes to sustainability accounting. You'll be taking the lead, right? Working hand in hand with sustainability professionals. However, when it comes to data, we'll be talking about data, we'll be talking about this AI. It also lies on you to sensitize the key decision makers within the organization that these are the things that we need to do, we need to put in place. These are the reporting requirements we need to meet. This is why it's important. And then, like we said here, you could support or lead the development of controls and processes for accurate ESG data collection and reporting. By the time you look at the type of data you need, you'll be able to say, please, this is how we can upgrade what we have, okay? Data management solutions within an organization. You can lead the upgrade. You can lead the acquisition of maybe a new data management, ESG data management platform for the organization, knowing the type of information you need. So you can contribute to that process. So for AI, we are seeing that it will still continue to support advanced predictive analytics. We are saying that it has to do with forward-looking reporting, that is sustainability report, accounting and disclosures, have to also do with forward-looking information. So it will continue to support in the analytics and a presentation to continue to integrate with emerging technology, because people will be coming up with solutions, okay? So AI will help to integrate with all the technologies that we use for sustainability initiatives. And then personalized sustainability insights. So it will provide increasing personalized insights and recommendations tailored to specific industries. So when an organization wants to develop their strategy, these AI technologies can help. So let's look at some case studies. So at EY, some of our clients and partners have adopted EY technologies, both for implementing sustainability initiatives. And as I mentioned, when you deploy an AI technology, it helps with, could help with the end-to-end of the planning, the implementation, data gathering, analysis, and reporting. So we have Schneider Electric. So we have supported them to deploy AI solution for energy efficiency. So it's called EcoStruxure. So that's the name of the tool. So it's an Internet of Things and AI-powered energy management platform. So because, you know, being an electric or energy, they are in the energy sector. So their key focus is to monitor, to implement measures of sustainability initiatives for energy efficiency, energy transition, and so on and so forth. So this AI tool helps them to monitor energy use, identifies other efficiency opportunities. You can see that we are able to achieve 40% reduction in energy costs for clients. So this tool will help them to gather the data and quantify how much they have saved, quantify how much in monetary terms that they have also saved. So that is what this company, what they have done. So there is also Unilever, responsible sourcing through AI. This one has to do with the supply chain. So we have also supported them to deploy an AI-backed blockchain platform for supply chain traceability. So it tracks these figures that we are saying that you will get from the sustainability professional. Gives you the quantity of raw materials that they have used, whether it's palm oil, whether it's tea, right? So by the time you get this information from this tool, you can do your financial accounting. You can now assign monetary values to. So it also helps them to enhance transparency because it helps them to analyze the data and to present them on a dashboard. So it can also help them to generate reports. So it helps them to analyze real-time data. You can just come there and you see what is happening, okay, what the suppliers are doing, the blockchain and everything. So the next one is Google Environmental Insights Explorer. So the name of the tool is an AI-powered EIE, that's Environmental Insight Explorer platform. So it calculates their own, Google wants to calculate their GHG emissions, okay? They want to calculate it. They want to know if we're emitting this, how much are we paying in carbon taxes? If we want to reduce emissions, how much do we need to spend to reduce emissions? How much have we spent? So this tool helps them to do all this estimation, brings the data, okay? And it also helps for the reporting preparation. So it collects both structured and unstructured data so that nobody has to pass through the source because they're using satellite imagery, they're using traffic flow, okay? And then identifying what we call emission hotspots, where the highest source of emission comes from, calculates them, okay? So when it calculates all these things, you, the accountant, will have the information to now do how much have we spent on reducing emissions. How much has it? We are not paying carbon tax in Nigeria yet, but there may be organizations that are subject to what we call the carbon CBAM, that is carbon border adjustment mechanism. So if you're exporting to a country that has CBAM in place, it means that you need to look at each carbon intensive product that they are exporting, how much are they paying as carbon tax on those products for that organization. So you still need to think of carbon taxes when you are doing. So when you are costing, you don't think of it because there's no carbon tax in Nigeria. But by the time you trace your sustainability footprint, you're able to see that, yes, we are spending money on carbon taxing. So Microsoft, we partner with them, not just to deploy this AI for carbon tracking, but also provide this solution for organizations. We have worked with some organizations in Nigeria that want to deploy this Microsoft AI for carbon tracking, the Azure Sustainability Calculator. So it helps an organization to track carbon emissions, okay? It's helping Microsoft, of course, they are using it, they are the people that developed it, so they are using it, but they're also supporting other organizations to deploy the solution. So they track carbon emissions across their supply chain, okay? So by the time you're thinking of how do I, you don't need to spend money to pay somebody to come and be doing this emission calculation for you every day. So this solution helps you to calculate it. Your own part would then be to get the data and quantify the financial or expected financial impacts from these emissions. So I believe that this is the final.
Luxury and energy efficiency can definitely work together because the better system design, the better integrated system you have, the more efficiency you can get. Hi, I'm Michael Wang, Marriott Global Design Asia Pacific Continent Head. We, with Schneider Electric's help, conduct regular training and workshop with all of the consultants and owners so that they're aware of our goal. So the experience that we want the guests to have is really that they're able to have a very comfortable stay with all of the control and lighting, air conditioning requirements, heating requirements, and at the same time that they are very aware that Marriott is a company that is very focused on sustainability, and with Schneider's help, it will help us achieve that faster and quicker. The use of Schneider Electric systems and services like Resource Advisor, power distribution, building automation, lighting, guest room solutions, and UPS has given us a great 10 to 15% in energy efficiency savings. China really wants to promote internal tourism. They are now building hundreds of resorts within China, which has never been done before. It's a huge market for us. Marriott and Schneider share the same vision, and I think that's why it becomes much easier for us to reach the same goal and partner towards that sustainability and energy efficiency for all of our hotels.
Okay, so this shows how Schneider Electric has been able to tap into the opportunities that exist in the sustainability space. So it is because of these opportunities that they developed the solution for their customers and the people that use, including people that buy the technologies and the people that use those hotels. So not only have they tapped into it by developing solutions, energy efficiency solutions for customers, they have been able to also utilize an AI tool to monitor the implementation and see how much is it helping them in profit making, okay? How much is it helping them in savings, and how much have they been able to see in terms of energy savings, how much have they, their own footprint? It helps them to measure all these metrics. And I'm sure that when you pick up their sustainability related financial disclosure, if they have one, maybe they have a TCFD report, you will see where they are disclosing all this information. So I know that someone has his hand up. We'll take questions now from anyone who has a question. Thank you.
Yeah, thank you. Thank you. Thank you very much. We have a few questions on the chat box. I don't know whether you are having access to the chat, to the Q&A. Do you have access to Q&A, Ngozi?
Yes, I do.
Yeah, please. We have two questions on Q&A.
So it's saying, is there any relationship between internal, the first one is saying, is there any relationship between internal control over financial reporting and sustainability reporting? The second one, is there currently any universally accepted is it framework? Is there any universally accepted framework? Is it for sustainability accounting? Yes. Measuring and reporting sustainability reporting sustainability performance in financial disclosure. That's the second. What do you think in a situation whereby companies struggle to provide consistent, accurate sustainability information, which may lead to confusion and mistrust? Don't you think that sustainability can also lead to greenwashing, where companies prioritize presentation over substance, exaggerating performance or hiding negative impact? So, differentiate environmental accounting function and sustainability accounting function. Okay, so I'll just try to take some of the questions. So first of all, let me just talk about the person that mentioned greenwashing, because we mentioned this when we were talking. So for greenwashing, I've said that the traditional sustainability reporting kind of encouraged greenwashing, because an organization can come and make any claim that cannot be linked to what they have in their financial statement. If an organization says that they have spent a certain amount of money on maybe a social, maybe meeting the needs of their employees, employee welfare, they have mentioned a bogus amount of money, you will not be able to verify that information. But when it has to do with something in the financial statement that the accountant has already accounted for and said this is a sustainability related issue, for them it's material, for example, employee welfare, and you have it in your books and it goes through audit, okay, you have to show it to the auditors that this is actually, show evidence that yes, this is how much was spent on say employee welfare. Then by the time we disclose it in that sustainability part of the report and reference where it is captured in the financial statement, during the audit of that, because even the sustainability related financial information will be audited, the auditor will also need to, or assured, we need to look at the evidence, okay? So before they can publish it, so that assurance gives confidence to the stakeholders or users of that report that this information has been verified. So without the accountants doing that extra work of accounting for it and saying, yes, this is how much was spent, then it could be a bogus claim. So I don't know if I have answered the question. So for the internal control, yes, it's used for data integrity, right? So it helps to ensure that you are collecting your data, including the sustainability data. So it makes sure that the data needs are well defined, they are controlled. When we are doing assurance of even this sustainability data, we look at these internal controls, okay? We look at them when it has to do with assurance. So they also have a role to play when it comes to the data gathering, the data quality assurance of the data, the validation and everything. So to minimize error, part of what we are saying that the AI tool will do is already done using this ICAN-ngr. So it helps us to ensure that the individuals that are responsible for data collection, they are helping us to prevent error and fraud, okay? Fraudulent claims, this greenwashing we're talking about. So they also have a role to play. So companies that are struggling to provide consistent and accurate sustainability information, it may lead to confusion and mistrust. So there are standards that I mentioned. They help you to provide information that is consistent and accurate. Okay, so when you're providing the information using those standards, according to those guidelines and standards, your information will be consistent, okay, and accurate, verifiable information, so that people are not confused. If you are not providing the impact of a sustainability related issue on your financial, on your cash flows, you are not providing it, okay? You can tell stories from here to there. The person that is looking for the information will look for it. He didn't see it there, he'll move on, it's not there. So no story you can tell can confuse. No one we used to tell big stories there, it could be confusing, but this is a more structured approach to make sure that it's consistent. So for universally accepted framework for measuring and reporting sustainability performance, I mentioned some standards, okay? It's a process from your materiality assessment, the risk assessment and prioritization. So IFRS S1 and S2 is your go-to, currently, because it will be telling you, have you done this? Have you prioritized? Tell us how you have assessed and how you prioritize. It tells you that you need to assess and prioritize. So there are certain frameworks that you can use. For example, we've talked about the GRI, we've talked about the SASB. It helps you to know what information that you need to disclose. So, but it's not like there's a one-size-fits-all. Organization can develop their framework based on these globally acceptable standards on how they want to. So when they are disclosing, you are showing how you did all your assessments, right? So maybe in the risk management section of the report, you are showing your process for measuring these risks and opportunities and quantifying them. Okay, so there's no singular framework that you can pick up and say, oh, this is what I'm using. But there are guidelines that you can actually leverage that we mentioned. We mentioned this ESRS, the CSR, the ESRS. Okay, so you can leverage this. So differentiates between environmental accounting function and sustainability accounting function. So the thing is that environmental aspect is a subcomponent of sustainability. So when you are looking at sustainability, you are looking at the environmental impact, okay? When you're talking about water use, resource use, natural resource use, you're looking at the environment, pollution. Climate change is a subcomponent of the environment pillar. So, we're talking about ESG framework when we're talking about sustainability. So you're looking at environment, you're looking at the social, you're looking at the governance. Okay. So I don't know if that answers your question. Potential risk of over-reliance on AI in sustainability. How can you when I was talking, I said responsible use of AI. Even people that are using ChatGPT and all those things for professional work, there is what we call responsible use of AI. You can't go and rely on AI. And I mentioned the data, you need to train it, somebody needs to collect it, somebody needs to validate the output from there, somebody needs to operate, it will not do everything for you. It will not take over the work of the accountants. It will not take over your work, like knowing what accounting methods to use and using it. That AI tool will not take over your work. So there's something that people always say, that there is a risk of AI taking over the work of many jobs. And someone says, it's somebody that does not know how to use AI that should be afraid. So if your organization is considering AI technology, your own is to learn how to make use of it, because you'll be there to, the accountants cannot be discarded. All right, so sustainability reporting required by blue chip companies alone or all business that prepares audited. So if you check the Financial Reporting Council of Nigeria, the IFRS S1 and S2, it's no longer sustainability reporting, it's now sustainability related financial. In your annual report, you disclose financial sustainability information that we have been talking about. So for now, we have the early adopters, then we have the voluntary adopters, people that just say, let me just do this thing. For example, Fidelity Bank, Seplat Energy, there are a lot of them that have early adopted. There are a lot of them that are voluntary adopters. Then we are now looking at the mandatory adopters that will start, I believe, 2028. Okay, all PIEs will be mandatory, right? And I think SMEs too, they will come up mandatory too. So they are preparing SMEs to adopt. Then government agencies, we are looking at, we don't have a timeline for them yet. So it's not just cheap, okay? So for the regulatory aspect of it, eventually, okay? Then I mentioned the Nigerian Climate Change Act that specified that organizations that have up to 50 people, staff strength up to 50, should disclose this information, okay? Especially on their climate change initiatives and carbon footprint. So you can see how it affects everybody. Is there any linkage between CSR and sustainability? So CSR, this is just, maybe you can do a little search to see the connection. Organization used to do CSR, it's non-mandatory. If you want to do it, you do it. You give us anything you like as, okay, this is what we did. But sustainability, there are frameworks, there are standards that you must comply when you are disclosing it. Even when you're implementing, you have to do it according to standards. All right, so sustainability accounting apply more to particular sector more than the other. I don't think there is any sector, like I said, I've mentioned adoption pathway for organizations. Okay, so sustainability is everybody's business. That is the concept. That's the idea. Okay, so if it's not, the thing is that the sustainability related issues, how it affects each sector differs. So what we affect someone in the energy sector, oil and gas sector, will be different from what affects somebody in the agricultural sector, manufacturing, that kind of thing. Financial services sector, they differ. So if you look at the IFRS industry-based guidance, it will help you to understand what are important for each sector. Okay, you can look for it. How can a real estate company integrate sustainability accounting in their financial? Following this process by what is material to them, quantifying the impact, physical quantification, and then how much have we spent, how much have we made, what is investment, just following that process that we described. It's not that if you're in this sector, the only thing that differs is what will be your material topics. What will be, I'm sure that will materiality, at least financial materiality. Okay, so accountants report on all areas issues in addition to, okay, so like I said, it's a handshake. You work hand in hand with sustainability professionals, okay? You work hand in hand with them to, if you are adopting the IFRS standards, you work hand in hand with your sustainability professionals, okay? What else? I don't know if we can take, how can sustainability accounting be leveraged to align with United Nations ESG, United Nations ESG goals? Are you talking about the SDG goals? Okay, so the SDG goals, if you see organizations that people that want to adopt, they will tell you that we are using GRI, and we want to use IFRS S1 and S2. We're adopting the standards. We also want to disclose our performance on the certain SDG goals, right? So it's possible to prepare. That would be like a standalone sustainability report. You would not necessarily have it inside that annual report where this financial information are disclosed. So the organization will have a very bulky report that encompasses all these other things. But what you summarize inside your annual report would be strictly to satisfy IFRS S1 and S2, or maybe CSRD requirement, depending on what the organization has to comply with. Do you think that environmental and social safeguard expert is crucial? Not really. Okay. No. It's the person except that person helps with your materiality assessment, your climate scenario analysis. Okay. Apart from that, they are not. If there's anything they need to quantify on E&S safeguard, they should already have done it and given to your in-house people that collect such data. Okay, I think, is there any free software apart from those listed that can be used for preparing sustainability report? So if you are not using software, all you need to do is to get a sample of such reports that you can find online and see how they presented their information and develop drafts the report for the organization, and then make sure that all the financial sustainability related financial data are there. Okay. So I think I've covered the questions. Are there any other questions? I think we have overshot our time.
Yeah, thank you very much. You have also done justice to all the questions raised. As a matter of emphasis, somebody asked a question about ICFR, and audit practice has been scheduled for March 19 and 20. So please join us on that webinar too. And for the rest of our program too, you can get to our websites and log and register for your program. So Ngozi, thank you very much for this wonderful presentation. In case we have anybody on the floor of Zoom who want to ask question, one or two, we can take that. I notice Sunday Adeoye. Let me unmute you that you can speak if your question has not been attended to. Sunday, you can speak if you desire to speak. Sunday Adeoye, your hand is raised. Do you want to speak? All right. Okay, I have Anu. Okay. No, the hands is lowered. Right. Thank you very much. On behalf of the Governing Council of the Institute, want to appreciate our people presenter this morning, this afternoon rather, Ngozi Eze from EY. She has done justice to the topic of today. This is a free webinar, and at the end of this webinar, the slide will be shared with only registered members. So if you register through Zoom, your data will be captured. If you join through YouTube, your data will be captured because we have sent various links of which you can register. So we can only have your data if you register either via Zoom or via YouTube. So the paper will be sent to you and you obtain your 2 credit points. For the rest of our program, please access the Institute website. And at the same time, the schedule has been sent to us as the presentation is ongoing. Please make it a date with us. And this year is promising. Do we have the chairman of the committee around who want to close us now before we round off finally?
Okay.
Solanka, are you around?
Yeah, I'm around.
Thank you.
I just said the National Population Commission. I know the chairman.
Okay, thank you. I think they are in another meeting there. So let me once again thank Ngozi. What she has delivered this morning, afternoon, has been very impactful. She has packaged a lot of things together, and she actually demonstrated her expertise in data, in artificial intelligence, sustainability. Our graphs of the subject is really a top notch. I didn't read her profile very well to know whether she's a chartered accountant or not. Well, if she's not a chartered accountant, I think she deserves an honorary one. So thank you so much, Ngozi. We appreciate, and we only look forward for you to be a faculty to our institute. I don't know to what extent you have been supporting us in our institute, but I think we really need your capability in really supporting us in the area of sustainability. We now have a new faculty on sustainability, and we are working towards some certification in that direction. So we'll continue to seek for opportunity to work with you, and we sincerely appreciate your time with us and the knowledge that you have shared with us this very afternoon. Please, I don't know what they do here. We don't have opportunity to exchange or give you a small gift, but I'm sure that we will do the needful in due course. So thank you so much. And I'm sure we can also have your contact and see how we can also work with you in some other, in some other areas. We appreciate you so much. And to all our participants, we thank you so much for your time. I have sat, I wanted to be involved in something else, but I could not leave because of the so much information that was coming from Ngozi. For that one, almost 2 hours, she took almost all our attention. And as we are promised, we will share the materials, the slide with participants. I don't know what Secretariat has made, the arrangement they have made for those who join by Zoom, how they can also ensure that they also get their credit hours and the materials. Please, Secretariat, let us know the number of participants that participated in this particular webinar this afternoon. Thank you so much, everyone. We appreciate you. We hope that we will put together another free webinar before the end of this presidential year. God bless you all.
Yeah, thank you, Mr. Chairman. Thank you for being with us. I can tell you authoritatively that those people that join us via YouTube are very close to 900, while we have 500 on this Zoom platform. But by and large, we have a registration link via YouTube too. Whatever be our funding, we'll let you know, sir. But we have considerable number of people that join this free webinar. Thank you very much, sir. On this note, we want to close this webinar with content. Thank you.
Let's go right and found of treasure in triumph of an array, standing stronger in harmony, building a land together. Dreams of a founding fathers, we are striving to attain our roots and values that we share. Through all ages we sustain. Institute of Chartered Accountants of Nigeria. Noble ICAN, noble ICAN, your accuracy we've cherished. We uphold your integrity.
Nigeria, we hail thee, our own dear native land. Though tribe and tongue may differ, in brotherhood we stand. Nigerians old and proud to serve our sovereign motherland.
Thank you, everyone. So February 26, 27 is our paid webinar on consultancy. Please join us. Thank you very much.